it seems like this particular issue is a particularly tough one, because it's so emotionally charged. And so, because there are other issues that we wouldn't feel, like we were trespassing, if you will, by maybe pushing the envelope a little bit. But because of the nature of this whole thing,
well, there are a lot of people that are very upset that their tax return requires them to file single under penalty of perjury, and they say in their eyes and in the eyes of their state, they are married.
Yeah.
Why should they have to sign under penalty of perjury that they're not?
Yes.
And so a number of people are actually adding affidavits to their tax returns saying, I am not single, I am married, I checked the box only because you require me to.
And the IRS doesn't like that sort of stuff either.
Well, they probably don't want more paper.
Well, they don't like anybody fooling around with
their forms.
With that particular part in their form. All right. So for now, California registered domestic partners and same-sex married couples have to split income and deductions. Is that mandatory?
Yes. As of 2010, IRS has been very clear about this, but of course they haven't published a public ruling on it. Mm-hmm. But they've been very clear. If you read the CCA carefully, and a number of us have had conversations with people in Chief Counsel's office, it is mandatory as of 2010.
Okay.
If you've already filed a return not splitting income, you're not required to go back and amend your return. You may go back and amend for any year that's still open. But the important thing is that for 2010, it's mandatory.
Okay. Now, what about partners or same-sex spouses who don't want their earned income to be community property? So what should they do?
There is an out. It is always possible to enter into a marital property agreement between spouses or domestic partners. But that's if you really don't want to be in the community property system, and so long as you've got adequate and independent counsel from two different attorneys, one attorney for each partner. Otherwise, the agreement is not going to be valid. You can't do anything about past earnings, though. They were community when received, so they have to be split. You can only make an agreement as to earnings in the future that will be effective for federal tax purposes.
Yeah. So what's really important about this really is that people need to get legal advice about this, because we are talking about real rights here.
Yes.
In other words, if you're saying this is my income and not yours, and you both agree, then the spouse who may not be the earning spouse is really giving up something.
Absolutely. That's why you need independent legal counsel. Yeah. And if you think you're doing something to make tax returns easier, remember that it's real. It counts. If you have opted out of community property, then if anything were to happen to the relationship, death or divorce are the two things that are usually bad for relationships.
Yes.
Then there won't be any community property there, and the poorer spouse may not be protected.
And it seems like almost as soon as there was marriage recognized in California and we had a same-sex marriage, shortly thereafter we had a divorce.
Oh, right. The people of California managed to divorce us in the Constitution by enacting Proposition 8.
Well, not just that. I'm just saying that some other people got divorced. The partners got divorced.
Oh, yeah.
And so then,
sure.
So we had to deal with the issues there. And so the thing is, think of premarital agreements and the same agreements that we would make as married couples.
Exactly.
Well, those things are available, and you can have them be effective to future things, of course, and then people fight about them when they...
I didn't really mean it.
Yeah, I didn't really mean that when they split up. So anyway, it's a very difficult area, even to advise people, and they don't seem to listen when you advise them anyway. All right, so let's talk a little bit about mechanics. And so how do you report this 50-50 split? I'm partner A, whatever. Okay, so I'm Michael and I'm married to Frank. It doesn't matter. And so I have a W-2, and it says I have $100,000 of income, and now $50,000 of that has to go on Frank's tax return.
Right.
So how do we do that?
Well, there is a publication, IRS Publication 555, that purportedly describes these rules.
Copy.
But
Publication 555.
It's available on the web. There are two things to note about it, though. One,
Yes.
It hasn't been amended since 2007. So right
Right.
now it contains language in it that says the community property reporting rules do not apply to California RDPs. They are planning to revise that. They just haven't done it yet.
Yeah.
And also the other thing it tells you to do, it tells you to take that earned income, that W-2 income, and split it on line 7 of the tax return so that you'd report 50% and Frank would report 50%. That is not what I advise people to do.
Okay.
Because then you're going to have a W-2 that doesn't match up with line 7. And it's going to look wrong. You're going to get an automatic IRS notice. You're probably going to get one anyway for filing this way. But the cleanest way to do it is to report your W-2 income on your line 7 and then subtract 50,000 of it out as an adjustment to income on line 21. That's just a line that says miscellaneous income.
Yeah,
you make it a negative number, and then you report it as miscellaneous income to Frank on that line. So, because it's not his wages. He doesn't owe Social Security tax on it. It's not his earnings. If he were drawing Social Security, that community income would not be his earnings, and it wouldn't affect the taxation, for example, if he's getting Social Security early. So the concept is your earnings, your business earnings, your W-2 earnings, your wages are all reported to the taxpayer who earned them, but you assign 50% of the net figure to the other partner on line 21.
Right. And so, as you said, there is a worksheet. It's on page 11 of this publication, 555, to try to help you out a little bit here. And the IRS website is www.irs.gov, and then you go to the section that says Forms and Publications, choose Publications, publication number, and you can find it. Okay.
Or you can Google IRS publication 555.
That's another way to do it. All right, now, what about e-filing?
Well, that is the question of the day. Most people think that RDPs, for this year at least, will not be able to e-file. A group of us, if you tried it under current software, it is impossible for you to select reporting single, because you're not married, so you have to report either a single or head of household. If that is the selection, if you check the box as a single taxpayer head of household, you cannot also check the box that it's community income. E-filing is supposedly available for married filing separately. They are subject to some of the same splitting rules. But the software needs to be updated to allow you to do that. The IRS tells us, and we've talked to a number of people, the IRS tells a group of us that have been in communication that there is a fix coming in the software, probably mid-February, probably soon, that will allow you to e-file. Now, and that means that you can fill out the spreadsheet and it will be filed with your return. The problem is you also have to split the withholding 50-50.
Yes.
And that's fine. The return should be accepted. I'm told that you should get your refund if you do a refund, but that mismatch of withholding between the two taxpayers is likely to generate a computer letter come next December. Now, it's just a computer letter. You just explain to them that the reason it's different is because you have community income and community withholding.
Yeah.
But a lot of taxpayers don't like to get mail from the IRS. So.
No, it makes them very nervous.
Yes.
But on the other hand, you just brought up an interesting issue. So it's fairly easy to make a trail on the front of the tax return, like you said, related to things like wages or maybe interest or something like that. I mean, that you can put it on the top and then subtract it under other income. Is going to this other person, but they don't have anything like that for subtracting for withholding.
Exactly, that's the problem. Now, and I don't know whether this is true, someone at IRS told me that if the withholding was close, so if you had two RDPs who had income that was pretty close and their withholding amounts were pretty close, that might not generate an automatic letter.
Okay. Now, time is going here. We'll have to keep an eye on the clock. So now, one person's earnings was used to buy stock. And it was bought with community property funds, right?
Right.
So has there been a taxable gift?
That is exactly one of the questions that we asked in the private letter ruling request. And the answer is no, there is no taxable gift. That follows from the application of Poe versus Seaborn.
Yeah.
It vests in both partners from the get-go. Ab initio, we would say in Latin. So there's no transfer from one partner to the other.
Okay. Now, usually, if I'm a married person filing a separate return, my capital loss limitation is half of the regular one, which is instead of $3,000, I get $1,500.
Right. Not true for registered domestic partners or same-sex married couples, because we aren't treated as though we were married. And so we're single taxpayers. Each of us has a $3,000 capital loss that we can offset against ordinary income.
Such a deal.
Such a deal. If they would allow us to file jointly, the IRS and the federal government would raise money, I'm sure. I would pay higher taxes if I filed jointly.
Okay. Now here's an interesting area. It's actually something that we were talking about before this interview, and that is Social Security. So is Social Security community income that should be split between two tax returns?
Well, we don't have a definitive answer to that. Most people say Social Security is separate property. We know it is for divorce purposes. We know that you cannot split your right to future Social Security payments as community property because of federal preemption. That is, the federal government controls who will get Social Security payments, and state law can't trump that. But we don't have any authority on it. We have a very strong presumption that anything that you receive during marriage in California is community property. So there's certainly a colorable argument that it is community when you receive it, even if you can't split the future.
Okay. So there's just tons of problems that we have, a very limited time, but let's talk for just a moment about Schedule C income. So one of the spouses, registered domestic partners, has a business. It's community income.
It is community income.
So now what, should I file a partnership tax return? How do you think that you should handle it?
I think you could, but the simple way, and I think this is right, is it's Schedule C for the person who's running the business, and you take the bottom line and you split it in half and report half of it as a deduction on line 21 and the other half as income on line 21. Because the person who's running the business is the one who's got self-employment income, and that's the only person who ought to be liable for self-employment taxes.
So that's what we have to remember also, is we also have a separate rule that applies, and this applies even for married couples. If it's one of their, because usually you're doing a joint return, so it's not so much of a problem.
Right.
But anyway, that person who is operating the business, it's their self-employment income, and you have to pick up the whole amount there. Whereas if you were doing separate returns, you'd still have to split that income to get it onto the two tax returns somehow.
Right.
Okay. Well. We only have maybe a minute and a half, well, about a minute left. Maybe you can put out some final words of wisdom related to income tax issues for same-sex couples.
The thing is, we know that Poe versus Seaborn applies. We know what the rule is. There's a lot of law that was developed between 1930 and 1948 dealing with spouses, because there were no joint returns then. But there are a lot of unanswered questions. And we're waiting to hear from the IRS on these questions, and they are working on it, but it's going to be slow. So stay tuned, and we'll provide updates, or you could visit my blog. I've got a blog called Same-Sex Tax Law on the Santa Clara University webpage, and we address a lot of those issues there.
Okay. Patricia, thank you for being my guest.
Thank you.
It's been a pleasure having you. We're going to do another program here that I hope that you'll also be able to watch about estate and gift tax issues. So anyway, stay tuned in the area, and folks, this isn't something that I would do myself. If I was a member of a same-sex couple, I would get professional help, and it's not just because I'm a CPA. Okay, take care now, and see you next time on Financial Insider Weekly.